The Reserve Bank left the cash rate unchanged for the second straight month at 4.1%. Over the past 5 months, the Reserve Bank has left rates on hold on 3 separate occasions. This shows that we are at or near the cash rate peak. It also shows that the Reserve Bank is becoming more confident that they have done enough to bring inflation back to target. A key recent change in the Reserve Bank's rhetoric has been that the balance of risk between inflation on the one hand and the economic outlook on the other is much more even. The Reserve Bank statement acknowledges that the cash rate has increased rapidly from just 0.1% last year to 4.1% this year, and that's really weighing on demand. We have seen retail trade volumes fall over 3 consecutive quarters, spending per capita fall at a record pace, and housing construction pull back sharply. And there's more tightening to come, with a large share of fixed rate mortgages rolling over onto much higher variable rate mortgages in the second half of this calendar year. It's clear the Reserve Bank has become much more alert to the risk of a hard economic landing and the unemployment rate increasing by more than what is required to bring inflation back to target. According to recent Reserve Bank commentary, an unemployment rate of 4.5% is consistent with the inflation target, a very low unemployment rate by historical standards. At the same time, the Reserve Bank is also alert to the risk that services inflation could remain sticky, particularly if we see wages growth accelerate over the next quarter or two. The Reserve Bank's forward guidance suggests that incoming data will need to convince the board that inflation is deviating from its disinflationary path to trigger further hikes. We see the economy slowing further from here under the weight of higher interest rates. This means we do not expect to see the Reserve Bank hike again this cycle. Indeed, we expect to see the cash rate remain at 4.1% until the second half of next year. At that time, it will be clear that inflation is coming down and the Australian economy needs policy support.